What's up, everybody? It is Monday, June 13th, 2016, around 7 p.m. Eastern Time. Time for the market analysis video. So looking at the SPY today, we had a very red candle day, closed lower near the lows and sold off at the close. The last few days or weeks even, we've been seeing a rally from 3:30 to 4 p.m. at the close. And we didn't see that today. We saw selling here on this Monday. So, and we had heavier volume. So, it was a pretty bearish day. Pretty much confirmed the reversal that was happening. It closed below this kind of mini support line that was hanging. That kind of represents both this little stutter step on the latest rally and this high that we reached on around 420. And so we ended lower below all of that. So the next line of support is probably the 50-day moving average. We'll see if it can catch a bid around there, around 207.50. It kind of caught a bit on the 50-day back here in the beginning of May, beginning to mid through May. We saw it kind of catch a bid. It went lower, but stayed, got bid up at around this area around 204, so that would be the level after this level here at 205.50 and the 50-day. So with that being said, looks like we're going lower. It'll be interesting to see if it will hold here at this 204 level, or if it will, which I believe it'll get to, or whether it'll break through the 200-day moving average and go all the way back down into the 190s maybe. There are a lot of headwinds in this market. So with Brexit and the FOMC meeting both looming, we've got an interesting situation with whether Britain will leave the European Union, and what the forecast will be for rate hikes following FOMC statements. But with those headwinds, there's the adage that the market climbs a wall of worry. And so if these fears aren't realized, if crisis is averted in either of those two scenarios or both those scenarios, that could position us for higher prices, although how much higher is a question, since from a fundamental point of view, I think we're around 16 and a half times forward earnings on the SPY, which is a little bit rich. But again, with these headwinds, if these these negative possibilities are averted, it could end up sending us to higher prices. With that being said, looking at oil once again closed lower. Actually closed at support here. So we have this little area of congested price, and the 200-day moving average closed on the top of that. So we are still in the support area for oil. We still are above the 200-day moving average, so it's remaining constructive, although the pullback is looking a little bit deep. And if we get a deeper pullback on the SPY, it'll be difficult for oil to stay above the 200-day moving average. Along with that, speaking of the dollar, we saw the dollar actually pull back a little bit, which is interesting. Kind of shows that this isn't purely a dollar safe haven, euro only crisis, but we are also seeing some headwinds globally, and so the dollar can't necessarily take all of that risk off. So not all the money that's coming out of equities is going to go into cash or into the U.S. dollar. Some of it could go into other assets, whether that's the Aussie, the yen, etc., or precious metals. So looking at gold went higher, closed near the high of the day, opened high, fell back down, and then went up to close near the highs, back up at the top of the channel, which is kind of what I've been talking about. It's getting there pretty quickly. Another day or two, and it'll be at the top near this 124 area, and it'll be interesting to see what will happen. So a lot of this is a run-up Firstly, on the idea that rate hikes for the U.S. dollar won't happen anytime soon, and then secondarily on this idea that Brexit is a real risk, and there's a good possibility that it will happen. So if we see Brexit not happen, if we see the Britain vote to stay in the European Union, we could see a bit of a sell-off in gold, although it'll be interesting to see how widespread that is, especially if the Fed comes out and does what gives a fairly dovish view on its next meeting and kind of pushes back and says, you know what, maybe there aren't going to be 2 hikes in 2016, etc., etc. Then it'll be interesting to see how that all pans out for gold. But we've had a big upswing move that happened pretty quickly. It'll be interesting to see if we get a pullback to the 50-day and then launch higher. That's actually what I would think might happen over the course of all of this, although there's obviously several scenarios depending on what happens with Brexit and so forth. But I think gold looks like it wants to go higher. Looks like it's got renewed vigor here over the last several days, gained a lot of ground very quickly for an upside move. And so we could see higher prices in gold here quickly. With that being said, the Qs and the Russell both looking similar to the SPY, downward trends, and so we're at least for this week, it looks like risk off is the name of the game. Although it'll be, like I said, it'll be interesting to see if this pullback is followed by an aversion of crisis, or if we avert crisis in this Brexit vote in the FOMC meeting, it'll be interesting to see if that is fuel to the fire for higher prices in general and in the SPY and so forth. With all that being said, trade setups I will post in the morning, and hey, follow me on StockTwits at Trade Kraken, Kraken, Trade Kraken, on Twitter at the same name, and subscribe to my YouTube channel, Trade Kraken, on YouTube, so you can catch all the latest videos. All right, thanks for watching. I appreciate all the comments, all the likes, all the follows. With all that said, God bless, good luck, great trading.